Hi, today is Friday, 15 December, 1:22 p.m. Eastern Time. We have a disclosure here. I like to cover Fridays. We are done trading this year, but normally on Friday, things are a bit different on Friday. For swing trading, you can swing trade the market every day when the market's open at 9:30, and then 1, 2, 3 trade. We should catch a trend. If we cannot catch that trend, then we stop it. On Friday is a bit different because you can start early on Friday, but usually around 11 o'clock, 12 o'clock Eastern Time. Not every Friday, but a lot of Fridays, that the market, once the traders close and go home, the market takes one direction, a little bit back and forth, but the trend stay on the same trend. And this is, we've seen it many years on Friday. So this is the advantage for that system on Friday, that the last hours on Friday, if this market deciding to take one direction, then you can catch a really nice move between 11 and 12 o'clock. And for the traders, they've been trading for a very long time. They know that. For the new traders, maybe they are unaware of it, but the Friday is usually different than any other normal day. So most of the time on Friday, the last 3-4 hours, the market takes direction. As an example, I want to show something that we catch those trends a bit earlier today on the ES. It was from morning 5:31. And we still on the same one trade, and you can see the market has not changed direction. Let me look at the 5 range. $5.52, one trade on the 5 range, and we have not closed position. And you can see how this market climbing and going up and up and up. And this is beautiful for one trade. But most of the time on Fridays, you start catching up a trend somewhere around that area here, all the way till 4 o'clock. 3:30, you can close position. If you want to, you can close the position around 3:30 Eastern Time. I do not like to hold positions on the weekends. Things can go wrong on the weekend. So I like to have a peace of mind on the weekend and not close in position and not keeping position open. As an example here, let me take this one out of the way. Oh, by the way, this is Ninja Trader broker connection. We can see, if you look at this area here, that's why we said we don't want to trade anymore this year. We're done, because we have a lot of those. Now till New Year Eve, we will have a lot of flat markets. We don't know when the market is going to move, so maybe it's better to sit on the side from now till New Year Eve and get ready for next year. But let's study what happened when the market is flat, that we have a minimum damage, and this is very important to have a minimum damage to our account if this market is flat, which you cannot avoid that. We don't know sometimes if the market going to be flat for the next half an hour. Nobody knows. So let's study the stop losses if the market is flat and we have a trade at 23.75. We exit at 22.75. It's $5 per tick. This is NASDAQ. You do the calculation per contract. It's $5 per tick. Then we enter the market at 26.50, and then we exit at 25.50. So both of those losing trade is not just a price of a pizza, you know. And then we have a small one here. Then we enter the market at 9.45, fair enough, and we're still on that trade, which on Friday is not unusual to see the market take in one direction. It's not unusual. You know, one of the things reminded me today, that chart, we were trading with somebody a few years ago, and he called himself a master with the trading, and I was trading next to him, and the guy, it was the same, almost the same, but kept much more on that day, and he kept trying to reverse the market, and it was a Friday, and I knew the trick on Friday. The only thing, technically, he was shorting out the market on a Friday, and I know on a Friday afternoon the market is just keep going in one direction, either up or down, and that is what I stayed on one trade, and the guy kept reversing the market. Technically he was right, but he skipped the idea on a Friday the market goes on one direction. And that day we had a bet between me and him, and he kept constantly trying to reverse the market, and you cannot reverse the market on the last few hours on a Friday, because usually taking direction, and that was the secret for that day. And I was laughing because I was not trading on the technical side of the market. I was trading because it was a Friday, and I just catch the trend and I stayed on that trend. So I'll never forget that day. That was a few years ago, and he still hunt me for it, and I until now he don't know what happened that day. So I'm very much comfortable with the Friday, the market going in one direction. This is another NASDAQ also, when we had one small trade, okay, acceptable, and then what is this? It's 1,000 volume, okay, and the entry was at 21. We exit at 29. We went short at 28.50, and we exit at 31. Then we took another loss. I cannot read this one here. 40.50, and we exit at 38. That's 1.5. And then we enter the market at 11 o'clock and never looked back. And this is beautiful. And that, if you keep your eye, even if you are not auto trading, that you are a manual trader, keep that on in your mind on Friday. Do not reverse the market. Try to, if this market, I mean, I'm not saying every Friday, but you have to consider Friday is just part of the trading that could take one direction, and that is pleasant if you can, even if you are a manual trader, pleasant if you can hold your position and stand making a target, just like what I do, a break even a +1 or a break even a +2, and let it and move your trailing stop from one fib line or one support line or one resistance line, because sometimes the market can go up the last 4 hours non-stop, or can go down non-stop the trend is down. So once the market start trending one of those direction, there is no look back, and this is an advantage also if you wanted to trade with that direction. But for normal trading, try not to make targets on a Friday once you start diving into 11, 12 o'clock, because it could be that trade, the trade for that week. And this is very much known well among the traders, the ones they've been trading for a very long time. They know that. This one here also from 926 and until now has not, but all trading, live trading now is off, and it is a good time for the trader in those time to learn a little bit about the market and stay away from the trouble, and not to trade live because we have no idea if this market right now, the closer we are to the Christmas, the flatter this market is going to be a little bit hard to trade. So be safe with it and try to learn a little bit about the market. And we stopped live trading, and I told my traders not. I don't know if they all did, but this time of year that trader can lose a lot of money if he is not aware of the chop market. On this one here, on the NASDAQ, also, if you notice, we have a chop, and then when here's the things. If this market is trending, we're not gonna miss it. If this market trending, we're not gonna miss it. But if this market not trending, we are going to be conservative with our stop loss and waiting for this market to spike. Friday, most of the time, like what I have covered today, it's going to trend either direction. If we can manage to catch 1 or 2 spikes a week, that can really get a big improvement on your account. If we can just catch 1 or 2 trend a week, and without a doubt, we're not going to miss anything. And this is the funny part, the ES, it moves slow, and a lot of traders probably today traded the ES. They were all over the place. What is nice about it, and it's pleasant to trade, the swing trade in here, that whoever took that trade today, I don't know if our traders, most of them now, they're on a sim. There is no more live trade, but this is gonna happen next year on some of those Fridays, and you can see on one trade and stay on that one trade is much more enjoyable. Trying to catch a trade middle of the trending market is like you're trying to catch a knife, a flying knife, and I don't like to take a trade middle of the trend. It is a little bit risky. Let's look at the scalpers, what they did. This is the 1 minute, and this is the 150 ticks, and we can see right now start getting in red, but it did very well. We have a couple losing instruments, the YM, and very minor on the ES. And now let's look at the signal entry. This is our third system, which is based on a signal entry, trailing stop, and a target, and they're all automatic and comes in with 3 different automated trade. The market analyzer is based on 1 contract, and those are the basic gold, 30-year treasury bond, ES, CL, YM, and DAX. They're all based on 1 contract and based on 1 minute. You will have the new signal, sell, your entry, your safe entry, the entry price, the trailing stop, the target, and it tells you how many ticks from the signal. And you can see on the last signal we have a total of 143 ticks from the last signals. It's not all day long. From the last signal on the gold we have 50 ticks. We have 4 ticks on the 30-year Treasury bond. ES we have 50 ticks. CL -7, 1 tick. It could be those are the new signals, and 46 ticks on the DAX. So if we are looking at the ES, you can see your entry, it was 65.25, and we have the target at 26.97, but immediately we can spot it that is having a hard time to penetrate our resistance line here at 26.78, and now we can see we have a projection here at 78.25. So this is a really trouble if you're trying to manual trade right now on the ES, because that is gonna sit like a pinball here, and that is gonna drive any trader crazy. Just for the Forex, we have an entry on the euro dollar, and here is the euro dollars in details based on a mini account, and we have the entry on the, this is based on 1 minute also, 76.77. The target is, as a matter of fact, we are fixing to hit the target is 75.01, and this is the Forex. Also, it is a pleasure to trade the Forex on a mini account following those signals here, and we can see right now on we have in total right now 138, because this is a mini account. No, I'm sorry, it is 139 pips, and the PNL 1382 right now. So the total here on those instruments, your basic instruments, we have in pips 138.5, and we can see immediately that the euro is a matter of time before it hits the target. And what is nice about it, those two yellow lines, you will find them also on the ESCL, where this is indicate there is no more selling for you, and once you hit that area here, that's mean the shorts are off. And if we look a little bit closely to the euro, you can see how the market came in exactly to our fib lines at 552. Look at it, and now is going back to 506. The target is 504. So you put one right there here and close your position right there. Right there. You close your position right above. You don't have to put it right on the target. Just one tick or 1 pip above the support line, and it is beautiful. Those are your $35 zone. The same thing here on the ES. Look, you can see it immediately from that line. I like thin line, I like a clear, and you can see this is the third try, the ES trying to break those area here, and then followed by the resistance. For a guy don't have the right tools on the ES right now, this one here can drive him banana. This area is a very critical area, and it is a very dangerous area because this market got stuck in those channels right now. So whether you are auto trading or you are manual trading, if you're not aware of the danger that sometimes the market can get stuck in a channel between those two lines or two fibs, or between the fib and the projection, and that could be a very, very dangerous area to trade. And look how the market got rejected. The accuracy is down to the 0.1. This is how the accuracy is down to. And we can see here the seller, and we can see is a blinking. There is some sellers coming in. So absolutely you are aware of this market going to hit your target. And you can see the seller and the buyer, and now there is more sellers coming in. And look at this. And here's your target. That is, I'm going to cancel this one. That system comes with 3 different auto trade, fully automated, or an ATM. You can use your own trailing stop and stop loss, or you can use the ATM we made for that one. And with the ATM, the one we made, it take exactly the same entry. All the auto trades, they take the same entry. It takes the same entry, and immediately, because it's been measured, if the market is flat or if the market is moving, it immediately has been calculated where is the target. And then immediately the ATM put it on the target, and then your trailing stops are your fibs. And then when your fibs move, your trailing stop moves with it. And if there is a pullback, your trailing stop move back a few ticks, you know. And if the market is done, then the trailing stop will not move back. We're the only one. We have a trailing stop can move a little bit back to stay on that trend. And that it is exactly how you do it when you are manual trading. So folks, that's all what we have for today. And I wish you a very nice weekend, and see you some other day. God bless you all. Bye for now.